Hey everyone, welcome back to Macro Truth. Today, we are going to pull back the curtain on one of the biggest deceptions in modern finance. You see that number on your screen? The COMEX gold price, the silver price, the one flashing on every financial news channel? I'm going to show you why that number is a lie. Not an opinion, not a conspiracy theory, but a documented structural lie. And if you don't understand this, you are going to get burned. So before we go any further, smash that like button and hit subscribe to Macro Truth right now. Trust me, by the end of this video, you'll see the entire precious metals market differently. Stay with me. Let's start with a story. Imagine you walk into a car dealership. You see a brand new truck, sticker price $40,000. You love it. You pull out your checkbook. But the dealer laughs and says, sorry, that's not the real price. That sticker price is for a paper receipt that gives you the right to maybe get a truck sometime next year. If you want the actual truck, the physical truck you can drive home today, that's $80,000. You'd be furious, right? You'd call that fraud. Well, that is exactly what is happening in the gold and silver markets right now, every single day, between the COMEX futures price and the actual physical metal price. And almost nobody's talking about it. Now, most people think the COMEX price is the price of gold or silver. They see it on their phones and assume that's what you pay at a coin shop or a bullion dealer. But here's the first dirty secret. The COMEX is a derivatives market. It trades promises, futures contracts. For every 1 ounce of physical gold that exists in the COMEX vaults, there are anywhere from 50 to 100 paper claims on that same ounce. Think about that. It's a fractional reserve system on steroids, and the price you see quoted everywhere is the price of the paper promise, not the metal itself. So when the news says gold dropped $20 an ounce, what really happened? A bunch of computer algorithms on the COMEX dumped a massive amount of paper contracts, shorts and longs, without a single physical bar changing hands. That's the lie. Let me take you deeper, because Macro Truth is all about what's really happening under the hood. The COMEX was designed decades ago to help miners and jewelers hedge their risk. But over time, it became a casino, a massive leveraged casino controlled by a handful of big banks, often called the Bullion banks like JP Morgan, HSBC, and others. These banks are allowed to sell huge amounts of gold and silver that they don't actually have. They call this naked short selling. It is illegal in the stock market for good reason, but in the COMEX precious metals market, it's perfectly legal, or at least it's not enforced. So what happens? These banks flood the market with fake paper supply and the price drops. Then they cover their shorts and the price goes back up. They manipulate the price both ways, and they laugh all the way to the bank. And the retail investor? The guy buying a few Eagles or Maple Leafs? He gets tricked into thinking the metal is worthless because the paper price is falling. But here is where the physical price lie becomes impossible to ignore. Go look at the actual physical market right now. Walk into a local coin shop or check any major online bullion dealer. You will see something shocking. The premium over COMEX, the extra cost you pay to take delivery of real physical metal, has exploded. For silver, you might see the COMEX price at $23 an ounce, but the physical silver bar in your hand costs $30 an ounce or more. That's a 30% premium. For gold, you might see $2,000 on the screen, but a 1 ounce gold coin is $2,100 or $2,200. That gap is the physical price lie made visible. That gap is the market screaming that the paper price is fake. Because if the COMEX price was real, you could just go buy physical metal at that price, but you can't. Ever tried to take delivery on a COMEX futures contract as a small investor? Good luck. The contract size for gold is 100 ounces. For silver, it's 5,000 ounces. And even if you could afford that, the delivery process is designed to be so cumbersome that almost nobody does it. 99.9% of COMEX contracts are cash settled, meaning nobody wants the metal. They just want to gamble on the price. And this brings us to the biggest bombshell, the one that Macro Truth has been warning about for a long time. The COMEX vaults are being drained. The reported amount of registered gold, the stuff that is actually available for delivery, has fallen to historic lows. I'm talking about levels not seen in decades. At the same time, open interest, the number of outstanding paper contracts, is still huge. Do the math. There are dozens of paper claims for every single physical bar. If just a fraction of those contract holders demanded actual metal instead of cash, the COMEX would default. They would say, sorry, we don't have the gold. And what happens to the price then? The paper price would decouple completely. Physical gold would skyrocket, not because of some conspiracy, but because of basic supply and demand. People want real assets, and the paper system is a mirage. We saw a preview of this in March of 2020 when the pandemic hit. The COMEX gold futures contract briefly traded over $70 above spot because everyone realized the delivery system was broken. The spread went crazy. That was a warning shot. Now, you might be thinking, okay, but if the paper price is a lie, why does anyone trust it? because the entire financial system is built on that lie. Central banks, ETFs like GLD, huge institutional funds, all use the COMEX price as their benchmark. They don't want you to know that the physical market is much tighter. They don't want you to know that central banks have been buying physical gold at the fastest pace in 55 years. They don't want you to know that China and Russia have been accumulating massive stockpiles of real metal while telling their citizens to buy gold. Meanwhile, the West is told that Bitcoin and tech stocks are the only inflation hedges. It's a game, and the goal is to keep you holding paper dollars and paper stocks while the smart money buys the real thing. Let's talk about the mechanics for a second, because I want you to really understand how this manipulation works in plain English. Every day, at specific times, the COMEX sets a fixing price. The banks submit their orders to buy and sell, but they also submit fake orders, sometimes called spoofing. They place large sell orders they never intend to execute, just to push the price down. Then they cancel those orders and buy at the lower price. This has been proven in court. JP Morgan paid a record fine for precisely this behavior. They were caught red-handed, spoofing the gold and silver markets for years. And what was the penalty? A fine that a tiny fraction of the profits they made. So they still do it, just more quietly. This isn't a free market. This is a fixed game with rigged rules. And the price you see on your screen is the output of that rigged game. So why should you care? Because the disconnect between COMEX and physical is now larger than it has been in decades. And when these things break, they break fast. Think of it like a rubber band. The more you stretch it, the harder it snaps. The paper price can be suppressed for a long time, but eventually the physical market asserts itself. That's what we are seeing now. Mints are rationing silver coins, premiums are at all-time highs, delivery delays are weeks or months, and yet the mainstream financial press still tells you that the COMEX price is the only price that matters. That is the lie. Macro Truth is here to tell you that you need to ignore the noise on the screen and look at the real world. Go to a coin show, call a refiner, see what it actually costs to take possession of an ounce of gold or silver. That is the real price. And here's where it gets even more interesting. The COMEX is not the only game in town anymore. The Shanghai Gold Exchange, LBMA in London, they all have their own prices. And increasingly, those prices are diverging. But because COMEX has the most volume and the most media coverage, it gets to be the default. That's like saying the most popular liar gets to define the truth. No, thank you. Real investors, the ones who survive and thrive in times of crisis, they ignore the noise, they focus on fundamentals. And the fundamental right now is that above-ground gold and silver supplies are strained. Mining production is not keeping up with demand. Industrial use of silver in solar panels and electric vehicles is exploding. Meanwhile, the paper market creates infinite supply out of thin air. Something has to give. Let me give you a specific example that will blow your mind. Have you ever looked at a COMEX warehouse report? It shows how much gold and silver is stored. But here's the sneaky part. There is registered and eligible metal. Registered is supposed to be available for delivery. Eligible is just stored there, but not for delivery. The banks can move metal from eligible to registered whenever they want. So when you hear that registered gold is low, they can just transfer some from eligible, but only if they want to. And often, they don't. Why? Because if registered stocks get too low, it might trigger a delivery panic. So they keep just enough to make it look okay, but the reality is most of that eligible metal is already spoken for, owned by ETFs or central banks or other big clients. It's a shell game, and the average investor has no idea. Now, I know some of you are thinking, this sounds like a conspiracy, and I get it. It's natural to be skeptical. But let's be clear, this isn't a shadowy group of lizard people. This is a small group of very large banks and exchanges who benefit from a cheap price for gold and silver because it keeps the dollar strong and inflation expectations low. They have every incentive to maintain the fiction, and they have the power to do it because they control the order flow. They control the reporting, they control the narrative. But here's the thing about fictions. They eventually meet reality, and reality is knocking very loudly. So what do you do with this information? That's the most important part of any macro truth video. First, stop watching the COMEX price as if it's the gospel truth. Understand that it's a highly manipulated derivative price. Second, if you want to own gold or silver, buy physical, buy coins, buy small bars, buy from reputable dealers. Take delivery. Do not buy unallocated pool accounts where you only have a paper claim. Do not rely on ETFs that might not have the metal they claim to have. There have been multiple scandals. ETFs leased out their gold or silver for profit, leaving investors exposed. If you don't hold it, you don't own it. That old phrase is more true today than ever. Third, consider allocating a portion of your savings to physical metal, not as a get-rich-quick scheme, but as insurance against a broken financial system. The COMEX paper price could go to zero in theory, but physical gold and silver will always have value because they are real money. And here's your action step for today. Go to a Bullion website right now, Pick a 1-ounce gold coin and a 100-ounce silver bar. Write down the ask price. Then look up the COMEX spot price. Calculate the percentage premium. That number is the real market signal. It's telling you that people are willing to pay a huge extra amount to avoid paper exposure. That is the truth the media won't show you. That gap, that premium, is the canary in the coal mine. And if that gap keeps widening, eventually the paper market will have to reprice or break. Either way, the physical holder wins. Now I want to address a common objection. Some people say, if the COMEX is so fake, why hasn't it collapsed already? Great question. The answer is because the manipulation is subtle and because most people are happy to play the paper game. They don't want delivery. They just want price exposure. And as long as the majority of traders are speculators, the system can keep going. But we are seeing a shift. More and more investors are demanding physical delivery. Retail silver demand has been through the roof. The US Mint has rationed silver eagles multiple times. This is not normal. When the average person starts demanding real metal, the fractional reserve system comes under pressure, and we are at that tipping point. You don't have to believe me. Just watch the warehouse reports, watch the premiums, watch the delivery notices. These are hard numbers, not opinions. Let me wrap up the core argument so it's crystal clear. The COMEX price is the price of a promise to deliver gold or silver at a future date based on a fractional reserve system. The physical price is what you actually pay to take immediate possession of the metal, and that price is significantly higher. The financial media and the bullion banks intentionally conflate the two to suppress the true value of precious metals. This is the COMEX versus physical price lie, and once you see it, you can't unsee it. Macro Truth exists to help you see through these lies and protect your wealth. Now, before I let you go, I need your help. If you made it this far, you are exactly the kind of person who values real information. Over clickbait. So please, take 15 seconds and leave a comment below. Write the word physical if you believe real metal is the only honest money. Write paper if you still trust the futures market. I want to see what my audience thinks. And more importantly, share this video with one friend or family member who still thinks the price on CNBC is real. They need to hear this. This is not about doom and gloom. It's about empowerment. Knowing the difference between paper and physical could save your retirement portfolio when the next crisis hits. So hit that like button if you learned something new, subscribe to Macro Truth so you don't miss the next deep dive, and turn on the notification bell. We have a lot more truth to uncover. I'll see you in the next one. Until then, stay skeptical, stay informed, and own something solid. Peace.